Well, good afternoon, everybody. It's a pleasure having you here today for the webinar. Today is the first of 2020. This was something we started earlier in Q1 of 2019, and it's one of the things that we're looking to relaunch. Today's particular subject is insights from the 2019 MENA Venture Investment Report. Some of the key takeaways that we have brought out from the report that was published last week. It's available on our website in both English and Arabic. And today I want to draw out 5 key things that we found interesting from the report and end on some of the predictions that we have for 2020. I'll try and provide some insights, not only from what we saw in the data, but very thankfully through MAGNiTT and the role that I've been able to play, I've been able to travel across much of the region and pick up some insights from the governments, the regulators, the key protagonists, including the investors and entrepreneurs. And I'll try and provide some of the color and information of that as we go along. Like I said, the report is available to download. We'll share the slides that we'll present today as well as a summary of the webinar. At the end of the presentation, I'll try and stick to 15 minutes. I will allow 15-20 minutes of Q&A for any questions that you may have that you would like to have some insights on. And as I mentioned, there is a poll that's running. Love to get your feedback and thoughts and views on some of your predictions for 2020. So as we get started, what are the things that we're going to look at? So what are the 5 key kind of takeaways that we're going to see as part of the presentation? Now, this is actually the 4th edition of the Venture Report. And each year we try and see how does it compare to a previous year? What has been something that many entrepreneurs keep asking, the appetite of investors, both regionally and internationally, of the MENA startup ecosystem as it continues to grow? A very interesting question is, are we seeing shifts on the ecosystem across the region? Are they the same countries? What's happening in terms of geography in the region? And the second one, the 4th one being industries. Obviously, it's very important to understand where is the money going, and we'll dive into what are some of the key features for that. And finally, something that I think is extremely important for all, both entrepreneurs, investors, governments, everybody involved, the exit space. What's happening for exits here in the region? So to start off with, where are we at? So what is the MENA funding evolution, as we like to call it? So this is the chart that we always put out. And as you can see, the years are on the x-axis horizontally. And we split this up into 2 different charts. The bar chart, where the red figure is the disclosed funding that we've captured through MAGNiTT. The gray figure is our proxy. And what do we mean by that? Every year, there are a certain amount of deals that are considered as undisclosed by investors. And we apply an average by stage and year for all of the deals that have been considered as undisclosed to give a slightly fuller prediction of the ecosystem. And then this black box, which we now currently call funding of Suk and Kareem. And I believe that moving forwards, MAGNiTT will start referring to this as mega deals, basically investments of $100 million plus, so that they can be differentiated, so that you can see growth of the underlying ecosystem itself. So when you look at this chart, the line above it is the number of investments. So this year has seen 564 investments, venture-backed investments, not grants. These are venture-backed investments in startups across the whole of the MENA region. That's a 31% increase compared to last year, and that's extremely healthy. Where do we get these investments from? So just to give you a little bit of color from MAGNiTT's perspective, it's a bit of a push and pull. We aggregate data from over 200 investors that we reach out to on a quarterly basis. We also have startups that come to us to do their funding announcement, as well as all of the startups that come and list their information on MAGNiTT that we then verify. And that makes up the 564 investments of this year. And when you look at the actual underlying investment, I'm going to go to the next slide where we remove those Suk and Kareem investments. So it's exactly the same chart, removing them. You've seen that this is a continued growth of investment in the MENA ecosystem year over year, a 12% increase to $704 million of investment in MENA-based startups. So that chart in itself, where you look at 2015, and in fact, in my forward, if you read it in the report, I mentioned that back in 2009, so in the decade or the last 10 years, there were 5 investments that accounted to $15 million worth of investment. So it's quite an acceleration for the region, and we expect this trend to continue in the years to come. But I think it's very important to put this into perspective. Now, we have brought out our numbers. This was a slide that we had last year. I put it into perspective from last year. We haven't got the numbers from CB Insights and PitchBook yet. They haven't announced their annual reports. But last year, and there was an excellent article that was posted on LinkedIn by Liwa, we've seen that the whole of the funding in the Middle East equates to just about the same amount of investment as the Netherlands, and just under, or sizably under, Spain. And Liwa pointed to the fact that it was the same as Finland as a country. So in the grand scheme of things, there is still a long way to go in terms of the amount of investment that startups are looking to receive here in the region. And there's genuinely a mismatch between the total amount of investment and the total number of startups that are seeking investment here in the region. Now, what do we expect in 2019? I don't expect this to be that much dissimilar. In fact, the total amount is a little bit lower, given the acquisition of Careem, and $100 million, $200 million of that was invested last year in Careem. So I expect that we'll be there or thereabouts. And I'll come on to later where we see new capital coming to startups here in the region. Now, in terms of funding institutions, so in terms of anecdotes, we've seen a lot of interest in MAGNiTT, the importance of data, the importance of the underlying data, and being able to capture this information for investors. We have a slogan that says that basically smart capital is what we need to be driving for here in the region, as opposed to just pure capital. And to start off with, we've seen both an increase in the number of investors that have been participating in MENA-based startups, as well as the number of non-MENA-based investors year over year. And this is extremely healthy. We want to be seeing new investors coming into this space. So last year, there was 159 different funding institutions that made investments in MENA-based startups. And this year, we saw 212 different funding institutions. Now, what's a funding institution by our definition? That can be venture capital, that can be an accelerator, private equity, corporate, family office, angel group, and the likes. 48% of this year's crop of investors had never previously made an investment in a MENA-based startup. So these are new family offices, entities, corporate VCs, accelerators looking to make investments in MENA-based startups. And despite there being a drop as a percentage of total, and we'll see this on the next slide, that 25% were international investors. The absolute number of international investors was higher year over year, showing a continued interest in the MENA-based startups from international players. In fact, you can see on the right, companies like MSA Capital, many Asian-based investors are becoming more interested in Middle Eastern-based companies, and that's extremely interesting. And I think that there's similarities with the Southeast Asian ecosystem to the Middle East startup ecosystem. I think that there is a growing appetite to scale into the Middle East than more than before. I believe that one of the anecdotes that I've heard from investors is that they're extremely interested in African-based startups, and that the Middle East is a perfect middle ground to be able to achieve that. And I expect the trend from Southeast Asian, if not Chinese-based investors in the Middle East will continue into 2020. And who are they? So starting with accelerator programs, we always put a chart of who the most active accelerator and VC or funding institutions were. For the first time, MAGNiTT's now stripping those into two different tables. There were that many accelerator programs that it's worth separating them from the overall funding institutions. In fact, there were more accelerator programs and cohorts in 2019 than any previous years. And many are coming out of countries like Saudi Arabia that had the MISC accelerator, they had the Seed Stars accelerator, and several types of accelerator boot camps to try and foster early stage investments. Now, in the absence in a more developed angel community here in the region, startup accelerator programs fill the void of not only funding early stage startups, but also providing an infrastructure and a program to help them develop into their MVP and future growth. In fact, we didn't go through an accelerator, but MAGNiTT went through a growth program, and the programs really provide an infrastructure of focusing on things that are important to the startup and working out their product market fit while providing the tools to be able to pivot and change as they go along. In terms of investors, you're seeing more investors making more number of deals on a regular basis. In fact, we've seen more companies and venture entities make 10 plus investment deals this year, again, more than any previous years. I think you're seeing new players emerge in the venture capital and startup space. For any founders that are listening to the webinar or looking at the MAGNiTT report, here is your hot list of basically active investors in the MENA region that you should be targeting for fundraising purposes. And this is the best way to identify who are the active players in this space. When we look at countries, for me, this is extremely exciting because we're seeing a lot of activity changing across the whole of the region. In terms of number of deals, so this is the absolute number of deals. We already said that there were 564 investments that took place in 2019. Egypt now ranks as the #1 recipient of investments across the whole of the region by number of deals, now ranking first, despite a small drop on the number of investments of last year. This is interesting, but it's also telling to say that many of them are at the early stage, whether it be through accelerator programs or seed funds. But it's not such a surprise, given the size of the country, given the history of entrepreneurship in the country, given the likes of the Rise Up conferences that are taking place in Egypt and the educational system that exists there, and the size of the market, you are seeing more entrepreneurs start ventures in Egypt than elsewhere here in the region and receive funding for them. Having said that, it's interesting to note that Saudi Arabia was one of the fastest growing, if not the fastest by number of deals, ecosystems in the region. We will be publishing next week our Saudi Venture Investment Report, and it's interesting to see all of the initiatives that are taking place to push venture investment in that space. And you are already, in a short period of time, seeing the results of those initiatives to further invest in startups, including accelerator programs and later stage. But it's telling to also see that the likes of the Lebanese and the Jordanian ecosystems have actually begun to drop off compared to the big three, despite having been early adopters of entrepreneurship in the region. When it looks at the actual amount of investment, now this is based on the headquarters of startups as identified through MAGNiTT, through conversations with them or on their profiles on MAGNiTT. The UAE still remains the hub with the most investment in companies that are headquartered there. 60% of investment, despite this year, the drop of 200 million in Kerim, you still see that the lion's share of investment is in UAE-based startups. Having said that, you're still seeing a rise in Egyptian-based startups and Saudi-based startups. And we will not be surprised if Saudi Arabia continues, given the initiatives and the funds that are being made available there, to continue to change. And I think that this dynamic is extremely healthy. It's not only healthy, it highlights a very key important point for all startups in the region, that you need to be regional. You cannot be focused on just one country, if not international. And you need to be able to scale into all of the geographies and benefit from whichever initiatives they are in them to be able to grow and become a successful startup. And a slide that we've added here is to highlight what are these funds. In fact, I've just posted on LinkedIn the links to all, at least 5 or 6 of these referenced funds that have been launched in the region. Now, again, there's a very big difference with the headline of what's actually been launched and what is being deployed. What are the requirements to receive the funds for this deployment? And you have to visit each of these individually to understand exactly the mandate of them. But there is no shortage, if you read the headlines, of announcements and funding that is available in the region. Starting with the UAE, where yesterday there was an announcement by the Dubai Council of not only the Dubai Future District, but a $1 billion dirham fund for SMEs and entrepreneurs. There's the DIFC FinTech Fund. Mubadala in Abu Dhabi announced not only the tech fund, but the Ghadan Fund led by ADIO, 535 million dirhams. In Saudi Arabia, there is not only the SVC matching fund for startups in HQ'd or with activity in Saudi Arabia, but the newly launched in December Jeddah Fund of close to $1 billion, and it's still to be seen how that is going to be deployed in the region. But other countries, Bahrain being the first mover advantage in terms of the fund of funds, 100 million, with already about 80% of that having been deployed in VCs, but also Egypt, Jordan, Oman, Kuwait, all deploying funds to try and push innovation in this space. And I think that this is extremely powerful and a catalyst to the growth of capital, which remains one of the biggest challenges for startups in the region. In terms of industries, now these dynamics continue to change, but fintech has clearly become the #1 recipient by number of deals. I always mention that in the emerging markets, it's not uncommon for infrastructure plays to become the recipients of the early adopters of investments. Now, historically, and you'll see by the total amount of investment, not number of deals, delivery and transport, which is a massive pain point, or at least creating efficiency using technology in that space, is the first adopters of funding in the region. But when it looks at what's the next wave, financial services clearly needs to be disrupted and is antiquated across the whole of the MENA region. And fintech solutions, and let me be clear, there's always this view that is this AI, blockchain, cryptocurrency. No, 50%, and this came out, we released a report with ADGM on fintech in the region. 50% of all fintech investments comes from remittance payments or transfer payment solutions, which is effectively the same as your delivery transport solutions, your Careems, your Fetchers, your Ubers, that basically pick up, drop off, but for financial services. And we expect that trend to continue. Having said that, you are seeing other industries see increased investments. You are also seeing, which is not on this list, the emergence of education, healthcare, and other areas where disruption can be created using technology to create efficiencies. And we expect this to be the story of maybe not 2020, but 2021. But one of the things that I do want to say is that I continue to get asked, is the Middle East just copycatting? And I don't believe that that is a bad thing. Being able to adopt technology, localize it, and create a product for a market where innovation and entrepreneurship or efficiency can be created with technology is extremely healthy. But if you want to see true innovation, there needs to be much bigger investment in research and development, as well as education, to provide technology and the tools and the talent to be able to support that. In terms of exits and top funding rounds, I just want to kind of wrap up the conversation from this perspective to say, where has that been happening? So here we're saying that the top 5 funding rounds accounted for 30% of all investments. And that's not uncommon. I mean, clearly there have been large investment rounds. The EMPG, which is effectively Beirut, property platform. You've seen Yellow Door in the UAE, which was a renewable technology. Swivel, Trucker, both in the logistics space, AWOC in the e-commerce space, and many more that come from that. And one of the things that we've seen is patience has had to kick in. We did an analysis, and it takes about 7 to 8 years for companies to exit. Before you get to exit, you get to Series A, B, C. Many of those companies that were founded in around 2013 to 15 are now only getting to the point where they're raising those rounds. And one of the pieces of analysis that I get asked the most from investors right now, is there a gap at Series B and C? And clearly there is a need, and we've just mentioned many of the funds that are looking to try and address that need, is to help fill the gap for capital at later stage. Because currently when you look at the names that are here, as you get to the later stage, many of these companies are looking to seek investment from outside of the region because there isn't the ability to fill that gap in the region. And that's something that needs to be addressed so that we continue to see maturity and growth so that you see more exits. Having said that, this year saw more exits than any previous year. And this is extremely healthy and a sign of maturity of the ecosystem at large. Now, you're seeing merger and acquisitions at an early stage to create larger entities that can compete and become acquired. You're seeing corporates come in, the likes of Majd Al Futtaim, even Imam Malls acquiring Namshi, Majd Al Futtaim acquiring Wadi and Beam Wallet. But you're also continuing to see the interest of international name-state players acquiring regional players to grow their market footprint, including Careem as an example, but also Harmonica that was acquired by Match.com, which was the premier dating site that acquired a local dating platform that provides them exposure to the Middle East. And I predict that next year this trend will continue. In terms of predictions, so I stated 5 that came in the presentation. Now, more than $1 billion. In fact, last year I said the same thing. Unfortunately, with the acquisition of Kirin, and then you see other larger companies not doing later funding rounds, this didn't come to fruition. But at $700 million, and with more startups looking to raise Series B and C, and with the investment of the funds or the announcement of the funds that come to fruition, barring any geopolitical issues with a risk appetite, allergicness from international investors, we should look to see larger deals taking place in 2020 than ever before. The second prediction is that we should see more exits than ever before as well, for exactly the 3 trends that I mentioned. This hockey stick that we see here should continue as international players become interested in the region, as more startups look to merge to become larger entities, and as more corporates become very interested in this space to digitalize themselves. And at 27, that number is not a hard number to beat, and we've already heard of 2 announcements of acquisitions in January alone. This is something that I believe is extremely important. As we see the likes of your WeWorks coming to the region and other entities to try and make it easier for startups to set up, the likes of your Hub 71 in Abu Dhabi looking to try and create an environment for international entities to come here, the likes of the Dubai Future District announcement to make a concentrated area for startups to be able to set up at lower operating costs or regulatory costs, and the ability in Saudi Arabia with Sagia to make licensing easier for those companies to enter the market. I expect the likes of your Deliveroos that operate in international markets to begin to try and move some operations to the region to build their footprint. They may then acquire regional players, but it'll be a first precursor to understanding what happens in the market. Number 4 is a little bit of an unquantifiable but important prediction. Quantifying it is very simple. The averages of failed startups internationally is around 90%. And while we see more and more startups enter the startup ecosystem here in the region, it is only natural that we therefore see more failed startups. But what we would like to see is more learnings from those companies. In fact, there is still a stigma in the region around failure. But there was an article that was written that I was tagged on LinkedIn by Basil Idris, who wrote his learning lessons of losing $2 million. And it was the most viewed article on MAGNiTT last year. The ability of all of us to learn from others and for them to be inspired to try and do something again is extremely important for all of us to grow and emerge as a startup ecosystem. And finally, we anticipate that there'll be more investors and acquirers for MENA-based startups from outside of the region. This will show the increased appetite for the region, but also an increased appetite to grow their geographical footprint in 2020 and capture a market that they can continue to scale into. I'm just going to take a quick opportunity before I jump into Q&A to highlight MAGNiTT. So we've really focused now on 3 core pillars. For anybody that's listening, MAGNiTT is a tool for you. The community allows you to engage with stakeholders, connect with investors, entrepreneurs, mentors, and the likes. You're able to post your jobs on the platform for free. We have a dedicated startup-only job platform, which receives over 600 applications a month to the startup roles on the platform. And you are able to apply to over 60 of the leading venture entities in the region using your profile on MAGNiTT. There's 12,700 startups on the platform, and that is a data platform for you. We've done our benchmarking against our international players, and we're twice the size of our international competitors in terms of MENA-based startups. And we will continue to focus on the depth as well as the breadth of the data of the platform. And finally, a key pillar that we'll continue to build out is our research. This is data-driven research that also allows you to do data analysis on the underlying data. I think that people don't know, and you can go to MAGNiTT now and go on the data charts. All of the underlying data that we put into this presentation, you are able to manipulate and change and filter by any questions that you have, by stage, by industry, by location. And along with this presentation, there is our annual report, our cornerstone annual report. It's 100 pages of analysis. This is just a high level. And for instance, if you want to look at the full investor ranking and how many investments they've done and split that by stage, if you're an entrepreneur looking to identify at your stage which investors are the most active, if you are a government entity or a corporate looking to try and understand geographies and where Oman ranks and Kuwait and Bahrain and the changes across geographies, and you're in your industry, a food or beverage or a specific industry, to compare and contrast, each of which we've done by the top 5 geographies and top 5 industries, as well as a full breakdown of the exit analysis on the platform, you're able to purchase that and unlock all the data on the platform, and we've done the analysis for you. And for anybody that's basically joined this webinar, we'll be sending an email afterwards where you'll be able to get a discount from the public price of $1,499 and to get it for $999 until the end of January, and there'll be a link for you to be able to purchase that. So I thank you for joining the webinar, and I will now take this opportunity to answer any questions that you have. The first question that I see is this number included Turkey? No, this number does not include Turkey. While we have plans to expand into Turkey, and not only Turkey, but Pakistan in the near future, as well as emerging markets at large, the data that is underlying in this MENA Venture Investment report is specifically focused on the Middle East and North Africa, which is 17 countries, which you can find in the free and publicly available report. In the end of the report, we have the methodology of what's included there. This is what would unleash bigger investments in Saudi, given that it's the biggest market and in the region and regulation. Look, Saudi Arabia is a very interesting market. I think that people don't quite realize that even at a business level and at a high level, it's still only coming online now. I used to work as a consultant and as a banker in strategy 10 years ago or another life. And Saudi Arabia was a very insular country. In the changes that MBS is doing as part of the Vision 2030, at a country level, things are beginning to evolve. But at an entrepreneurship level, there is a very concerted view to try and open up the kingdom for entrepreneurship. SAGIA, which is the Saudi Arabia General Investment Authority, has created specific legislation to make it easier for companies to register in the kingdom from abroad. SVC as an entity is allowing matching of all investments to unleash an investment in Saudi HQ'd or operating companies. Jeddah Fund that I mentioned from PIF also has a $1 billion fund, but I believe this also takes time. It needs to have international companies come in. There needs to be much more intellectual capital transfer from local founders to international founders, and international founders being able to capture the market. I think that there naturally needs to be free flow of talent and an environment for which talent is able to flourish cost effectively, but also to have the needs and requirements of talent to want to stay in the kingdom, and accelerator programs and mentor environments to help startups in Saudi Arabia learn and grow from international counterparts. What is the biggest gap in investment stages? So I've been saying this for a while. I don't think it's fair to say that there is any one investment gap. Genuinely, it depends on which person or entrepreneur you are speaking to that will say that there is a bigger gap. As I mentioned, it's a little bit like a pyramid. As the whole region continues to grow, there are more startups joining the startup ecosystem looking to enter. There are more companies that are raising larger rounds at later stages. There are more companies going to the latest stages. And at each level, there is a higher requirement for capital. I always repeat Walid Mansour's statement that there is a complete mismatch in the demand and supply of investment across the whole of the region, and that there is a need for governments and venture capital entities, as well as international players, to invest in that space. Having said that, there is clearly a much bigger need at the later stages for the ability to encourage investors to invest. And that is either through fund of funds, and it's natural. They have larger ticket sizes. There aren't that many VCs that can play in that space, but there are also fewer startups, despite there being more startups than before, that are acquiring that investment. So my simple answer is every stage. Do you have a sense of how much an impact the ecosystem has had on job creation in the MENA region? No. It's clear that certain entities have been able to create large job creation. Kareem's mandate was to try and support job creation in the region. I believe that that is something that they were able to fulfill. But to be able to say that based on data is a question we are looking to track. As MAGNiTT, we track the number of employees in different institutions. We look to gather that information, but I wouldn't be able to say exactly the impact. I would have to say, however, this is not a golden bullet. This is not a solution to unemployment. Startups are risky. They need to scale. They need to scale in different geographies. They require very different talent than a traditional business. And they need people that are hungry to work in a very challenging environment that not necessarily everybody is able to enter into. Having said that, startup founders, and we brought out our 500 startups State of Startups report, highlighted that talent acquisition and being able to find the right talent is, after funding, the second and third biggest challenges for startups here in the region. And this is something that is down to cost of living, education, the ability of transfer of talent across the regions, regulation, visas, the ability to hire. And there's a lot that governments can do to really help foster the acquisition and the free transfer of talent in the region. What do you think is the solution for smaller capital gap in the region? Well, number one, I think it's patience. The more success stories that we see, the more Kareems that we hear of, the more data that we hear around successful exits, the more people are inspired to enter and invest in the venture space. And that's at the angel level. I think what Kareem was able to do, at least at a family office level, was to really encourage people that missed out, that FOMO effect, invest in the region, and to provide them the ability to actually invest and have the risk appetite to invest in the region as opposed to internationally. The second is that the government can play a role. Now, if you look at the UK, for instance, there are tax incentives. In certain geographies in the region, there are taxations, income tax that can be offset by investing in the venture space. If you take the UAE, there isn't a direct income tax, but there are enough charges that we have that could potentially be offset by being able to encourage individual investors to invest in that space. And the third is that you see more accelerator programs come here with genuinely beneficial programs that can encourage and provide capital for startups at preferential terms to startups to help fill the smaller capital gap in the region. What is the most important factor that investors are looking for in startups, for your opinion? Look, I'm not an investor, and it's wrong for me to say that. I can only speak on my own experience. And usually I say that there are 5 things. In fact, I think that to be a high growth tech startup, it's important to have a solution to a problem that can be used, that can use technology to digitalize. A large market. One of the important things for, I think, founders in the region to have is an ambition to create a solution to a regional problem, if not international problem. Now, that doesn't mean that you don't start in your local city or country and use that as a testing ground or as an MVP to build a robust product. But ultimately, to have a scalable, high growth, technology-based entity, you need to have the ambition to go regional, if not international. Third is, as we've heard many stories, a clear path to monetization, and monetization that is scalable. And that's extremely important for investors in this space. Number 4 is to have a solid team. They always, at the early stage, say that a team is more important than the idea because the team is able to develop that product and change it and grow it into something that's phenomenal. And even speaking from my own experience, MAGNiTT is only as good as the people that we're able to hire to grow as a team, to build what I like to say is a kick-ass growing company that has ambition to be regional, if not global. But to be able to do that, you need to have the team members that are hungry, that are driven, and buy into the values of the company itself. And number 5, the ability to scale. You can have ambition and a market size that is big, but you need to be able to capture that market and to be able to do that. And I think it's very important, and I keep repeating this, venture capital is not charity. No startup investor or investor is expected to give you money. It is not a God-given right for people to give you that money. You need to be able to actually answer the questions or to de-risk yourself in their eyes to be able to grow your entity into something that becomes venture investable. And it's important to understand that when you're meeting those investors and to answer those questions, or at least have answers to them before you go and approach them. How long will it take more for the MENA to celebrate the entrepreneurial failures, same as Silicon Valley, and what will the VCs in the region open doors for really early stage startups, say pre-revenue? Look, again, the second part of that question, it is not the role of VCs, unless their mandate is to invest in early stage startups, to have to invest in pre-revenue. Each VC, when they set up, and it was a really great session at STEP a couple of years ago, where Danny Farha of Biko Capital, I believe that Khalid Al-Houni from Wanda Capital, as well as one or two other investors, were really highlighting, look, you guys as startups are going out there and raising capital from venture capital entities. But VCs also have to raise from LPs. And those LPs expect a return. And those returns need to be justified by investing in the right startups. Now they have their own approach and they have to do their screening and they have to see different kind of startups. But ultimately, each one has a different mandate. And that mandate dictates which kind of startups, either by stage, geography, industry, that allows them to invest. Now, there are early stage startup VCs, 500 startups, only invest, although that might be changing in their new fund, in seed stage startups. Some of those are pre-revenue. MAGNiTT is a tool for you. So for any founders on the platform, there is a startup package where you get access to the platform for free for several months. You can basically filter investors on the platform to understand what stage they specifically invest in, to better educate yourselves on which one are able to do that. The first part of that question, time, patience, confidence of founders to be able to share their stories. Sometimes founders, it is extremely challenging to be a startup founder, not only in the region, globally, but in the region, you have scars. And sometimes it takes, like a breakup in a relationship, a little bit of time for them to get comfort, to be able to share the failures that they have. And it takes individuals like Basil to be able to share his failures and then be inspired to do other things. Fadi Ghandour will always state that serial entrepreneurs make the best entrepreneurs. And I 100% believe that, because the experience that you have in your first venture will put you in a very good stead for your second, third, fourth venture. And then you have the confidence when you're on your second venture or third to go and share some of the failures that you have in your early ventures. Now, venture investment and entrepreneurship in the region has really only been around 8 to 9 years. Yes, there have been earlier startups, but as a movement, it really started in 2013 after the celebration of entrepreneurship here in the region. And so it's still very nascent and new. And it takes the guts of founders and our responsibility as founders to share the challenges and lessons that we have for others to be able to be inspired and to develop that culture. And you can't force it. Is there a noticeable social impact investment? Look, social impact investment currently, even in Abu Dhabi, there is a whole week on social as an industry at large, but social entrepreneurship is being discussed. It is a sub-segment of entrepreneurship. I think that there is specific areas, VCs, government initiatives focus on social entrepreneurship, and I think that's something that will continue to grow. But clearly, it is only a sub-segment of the larger space. Generally, do you think there is room for improvement by entrepreneurs to keep their shareholders updated with their company's latest news, for better or worse? In my opinion, transparency is lacking and adversely hindering investment potential. So, Wally, if you're there and you can answer my question, are you talking publicly or are you talking about conversations with investors directly? If it's with investors directly, it is the responsibility of the founder to keep their investors updated. In fact, it's a fiduciary responsibility to keep them updated. I do this at a minimum on an annual basis, if not on a quarterly basis. And that's something that you need to do to keep them comfortable that they've invested you for the right reasons, and for you to be able to show them signs of progress if you look to fundraise at a later date. If you're talking about at a public level, the public domain should not be your tool unless you have very interesting stories to do it, to highlight to your investors what it is that you're doing. It may be an indicator for future investors. It may be an indicator for consumers of new product launches, but for your existing investors, you should use direct channels to be able to do that. How long will it take more for MENA to celebrate the entrepreneurial failures? Oh, we said that at Silicon Valley as well. Omar Sati of Dash Ventures, who I'm pleased to say was the highest viewed application on MAGNiTT. He's always consistently 100% response rate through MAGNiTT, and I thank him for his support with MAGNiTT. So I would just like to mention that as I see his question. And then his question disappeared. Oh, no, upflow. Worth mentioning, time it takes to close funding rounds at various stages. A good indication of a maturing ecosystem is seeing the timeline shrink over time. In fact, that's a great point. One of the things that we removed as part of the exits discussion was a slide highlighting not only the time to exit, and we're going to be bringing out a report in 2019. If anyone would like to sponsor that report, I would welcome it, where we will do an average of investment sizes over the last 5 years at seed stage, Series A, Series B, and late stage, and the amount of time it takes to invest at each of those stages. But also that you see when we look at these mega deals in terms of exits, the time taken to see these mega deals. We are seeing a shortening in the time period to see larger and larger exits here in the region. And not only that, to Omar's point, the time it takes VCs to raise their funds. We've seen many VCs only now raising and closing their funds that they've been discussing for several years. So they face exactly the same challenges that we face as founders. I'm realizing that there's the upvoting feature. So I want to make sure that I don't lose any of the questions that you're mentioning. I think, and I believe that I have answered all of the questions. SoftBank's investments are casting a shadow globally on tech and revisions to normal valuations for startups. Realistically, do you think that your predictions for exits in the region are still probabilistic? So my prediction is that we'll have more than 27 exits next year. Yes, I don't think that has a direct correlation to SoftBank's investments. My prediction is based on the fact that we have more startups than ever before here in the region. Consolidation in industries like transport and logistics and e-commerce is required to see larger entities be able to compete at a regional level, if not international level. I believe that there is more international interest in MENA-based startups than ever before, and that MENA international entities will continue to acquire startups here in the region. If your question is the Uber unicorn exits, I don't genuinely see where a unicorn exit will happen in the next 12 months, potentially 18 to 24 months. But I believe that we're coming from a very different space to the effects of SoftBank's international investments for the region in itself. And we're still only at the bottom of a hockey stick in terms of inflection for the amount of investments here in the region. How much of these Series B, C growth stall do you think is due to funding versus MENA region not large enough or not robust enough? I think that a lot of it has to do with the availability of capital. Hence, every announcement that you see from the largest Adio's announcement of the Ghadan Fund, the Jada Fund in Saudi Arabia is trying to focus in that space. But I think that the MENA region has to see more scalable startups that require that funding, and that is naturally coming with the progression and growth of the ecosystem in general. Unless there is any more questions, I'm going to end the podcast there. Yeah, I'm going to end it there. Look, thank you very much for joining. Like I said, we'll be sending a quick email summary on where you can access the slides. If you're interested in purchasing the report, like I said, you can get that at a discount for the next 2 weeks with a specific link for everybody that participated on this webinar. We will be looking to relaunch our webinars. We would love to hear from you on what kind of topics you would like to have. I'm encouraging my team to also do the webinars. We will have our community manager hosting an event in the next 2 weeks. I would like our head of data and research to also do a webinar on specific subject matters. I welcome all of your feedback on this webinar and love to see how we can continue to enhance it. If you haven't got the free version of the report, we'll also share that, which you can download directly on the platform, and you'll be able to access these slides as well. So thank you very much for joining. If you see, I'll be in Saudi Arabia next week. If anyone would like to meet, I'll be there from Monday to Wednesday, where we'll be launching the Saudi Arabia report, specifically deep diving into the Saudi space. And if you're at the STEP conference that's taking place in February, I'll also be at that, and I'll be happy to meet. Thank you very much.